An average Sydney home for $1.5 million. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, let's look at this report from 9 News discussing, well, Sydney's housing market. Median housing, $1.5 million. $1.5 million, everyone. Isn't that, well, I'm sure that's going to make a lot of people in Sydney happy, but, yeah, you know, it's affordability. I don't know. I'm not surprised anymore. It's just going crazy. Property is Australian gold. This is what people invest in when they're concerned. This is where they want to secure their wealth. In Sydney, there's continued demand. There's even talk about foreign buyers coming back in, returning to Australia. And 1.5 million, there you go. So Sydney's median house price nears 1.5 million as prices skyrocket during the pandemic. Remember when the RBA was modelling a 40% price fall? Remember when we were reading article after article about property going down 15%, 20%? There you go. Sydney's median house price is now just an auction paddle away from a record-breaking 1.5 million as the nation's property market continues to boom during the COVID-19 pandemic. Now, median, this is where you've got half of your distribution to each side. So, boom, there's your distribution. We draw a line here. 50% below, 50% above. That's the median, everyone. And that's the number of properties. So, Domain's September quarter 2021 house price report has revealed that in the last 12 months, Sydney's house prices rose an average $6,700 a week or $957 a day. So why? Now, here's the issue, fundamentally the issue that we have in Australia, everyone. Housing affordability is not as big of a problem as, well, disincentivizing people to not go into housing. There's so much incentive to go into housing, it actually creates a disincentive for you to go into business, for you to invest your money into other things. Why take the risk when you go in housing? You've got, guarantee a historical precedent of property always going up. You've got a culture that's obsessed with property. You've got television shows that are obsessed with property. You've got a government that has now shown that they will use property once again, regardless of which side of the aisle that they're in, to stimulate the economy. You've got the banks who are willing to absorb significant losses and not foreclose on houses to keep property going up. You've got APRA allowing the banks to record those mortgages as not in arrears. So literally the whole system is stacked for property. So can you blame people for going into property? No, you can't. It's a great way to reduce your tax. Can you guess what I had to pay yesterday? Just transferred a nice big fat of money to the wad of money to the tax department. I've got other viewers who are leaving comments how they've just bought a property with, putting no money up front, using the equity in another property they have. The rent's going to cover most of it, and they'll write it off. They'll negative gear it to reduce their taxable income. Makes sense. Why not? Otherwise, you're just giving money to the government. What are they going to do with it? They'll waste it. They always do. Better in your hands, better building up your intergenerational wealth so you can pass something on to your kids, or you can actually have some property that you can leverage to get them into property. So yeah, more than $349,000 was added to the Harbour City's median price, which saw the fastest annual growth ever recorded at a wallet squeezing 30.4%. 30%. We're not talking Dogecoin. We're not talking Shiba Inu, some crazy crypto. We're talking Sydney property. There you go, everyone. There's the median house price per capital cities. Let's bring up the SQM data here and let's see if that's updated. For Sydney asking prices, what are we looking at here? 1.6 for all houses. Weekly this is asking prices. So there you go. 3 bed. 1.48. So yeah, 3 bed. $1.5 million, everyone. $1.5 million. Domain's chief research and economics, or chief of research and economics, Dr. Nicola Powell told 9 News that COVID-19 induced restrictions had prompted many Australians to think about the lifestyle and their property provides. So, yeah, people are making a change. We've seen phenomenal levels of demand at the market, and we're seeing total stock for sale hit multi-year lows. I think with what the pandemic has done is really put our homes into focus. We've spent more time in them. They've become our everything and out of lockdown. In and out of lockdown, Dr. Powell says. Homeowners are putting spare cash normally spent on travel into their homes. That's partly why we've seen this high level of demand for property over the past year as people fast-track their decisions. So here's change in median house price. This is from September 2021 compared with September 2020. I need to have a shot of coffee at this one. Oh, boy. Look at Sydney. Look at Sydney. Who else has moved? Look at Canberra. Look at that big move. Brisbane. We've even gone up. Yeah, look at that. First recession in 28 years. Lockdowns throughout the whole country. International tourism is non-existent. International students are non-existent. Migration is pretty much non-existent. Look at our housing. Oh, boy. Now the question is this a bubble? Are we seeing the peak? Or is this just what happens in Australia? You've got to think, when the borders open, when people can start coming from overseas again to invest in property, there's going to be demand. As much as people are frustrated with Australia, we've handled this whole COVID a lot better than other countries. Our economy is still doing pretty good. And if you're in the construction sector, you're flat out. Nationally, Australia's median house price has risen 21.9% over the last 12 months to hit a new record of 994,000, marking the fastest annual growth rate on record. Despite the doom and gloom headlines for first home buyers or heaven-sent conditions for downsizers, Dr. Powell said there are signs that the property market is cooling. Yes, but what is cooling? Cooling means we may only have 10% year-on-year growth, not 30% growth. Is that the cooling? And remember that 30% is so significant because we had a bit of a decline. That's why we're climbing up, digging up out of a hole. I think we're past the peak of growth. But in terms of price, the price point of houses will continue to rise higher. We're seeing the property market begin to cool down, with soaring house prices in the last year adding to ongoing affordability pressures affecting buyers' participation in the market. As COVID-19 lockdowns and restrictions come to an end, and the sustained high prices appeal to vendors, sellers are beginning to re-engage with the market, increasing supply, which in turn offers greater choice to buyers. Well, we're seeing that's been one issue with this. People haven't been selling. Now, you can't blame them not wanting to sell with all of the unknowns, but once the markets, the economy, our freedoms start to return to a more normal level, well. So it wasn't just Sydney that saw house prices skyrocket due to a myriad of factors, including high demand, low stock, historically low interest rates, and drastically lower discretionary spending during the COVID-19 lockdown. So Bolt was right. It's the smashed Ave, guys. It's the smashed Ave that you've been having on the weekends while you can't get in a property. Melbourne's median house price rose to $1.038 million despite being in lockdown for most of the last quarter. Canberra is now the second most expensive capital city to purchase a home, and Hobart's house prices have almost doubled over the past 5 years. The only capital city to experience a negative house price growth in the past 3 months was Perth, which saw a 0.6% decline to a median of 598. New listings will need to continue to be strong to appease rising prices, Dr. Powell said. The number of Aussies relocating to Perth has reached its highest point in 8 years. While there remains a positive inflow into Perth, it looks to be easing, but is being replaced with higher investment activity. As house prices jackpot, so too do concerns that property in Australia is becoming unaffordable for those on normal wages and who do not have existing equity. Well, how becoming? It's been like that for how long? I mean, Sydney is not for normal people. Okay, if you're not part of the earning the higher amount of money, you're not going to be a homeowner in Sydney. You're going to be a renter. Okay, that's just how it is. So if you don't like that, you got to move. You're not going to be able to live in the same suburbs your parents did. We don't have the same Australia that the boomers had. Guys, it's different. It's different. The sheer affordability of keeping up with rapid house price gains is proving a barrier for many buyers, especially first-home buyers facing spiraling deposit goals and poor interest accrued on savings. Upsizing is also becoming a financial leap despite the benefits of strong equity growth, and particularly challenging if sold prior to purchasing. So here we go, Sydney 30%, Melbourne. Brisbane 15%. Canberra 1, 32%. No, wait. Darwin, 33% growth. So, let's have a bit of a talk about this one, guys. So, housing affordability is suddenly becoming an issue. I mean, this has been something that has been going on for some time. I want to watch this next election. I want to see what comes out at this next election. If Labor will try and, address housing affordability, if they'll try and sort out negative gearing. I can't see them doing it. There are too many people that are invested in it. Too many people want to have property going up. It's too much a part of our culture. But we got to keep an eye on it, guys. This is the thing. And this is why, in uncertain times, we're seeing, where do Australians go? They don't go to gold. They don't go to crypto. They go to houses. I'd like you to watch this other video. This is desperate millennials hoping for a crash, everyone, because there are a lot of people that are desperate. There are a lot of people hoping for a crash as their one chance to get into the market. But the economic ramifications of that here in Australia would be huge. Anyway, thanks for watching. I'll see you all next time. Bye for now.